Welcome back. Well, it appears that American homeowners are sitting on a mountain of equity, that according to a recent column from CBS News. And the question is, what is the cheapest or least expensive way to tap into that equity in the home? So let's dive into this real quick. It says, according to a report released early last month, the average home equity held by American homeowners of all ages, by the way, is $313,000. That seems quite elevated to me. It seems like a real high number, but slightly down accordingly from the second quarter of 2024. But think of it in this terms. They write it represents a large six-figure sum of funds that could be available to homeowners. But how do they tap into it? Now, there's a number of ways that this column explores it, and tapping into home equity can be done for a number of reasons, but there are still some affordable options to do it, so let's take a look to see what those are. As of May 2025, it says the least expensive way to borrow home equity in a conventional sense is a home equity line of credit, but let me digress here just for a moment. When it talks about the cheapest option, many are thinking of, well, that's the interest rate, right? Or the upfront fees, but is it really? So let's look at the HELOCs. Right now, the average HELOC interest rate is just about a little below 8%, 7.95%. And the HELOC is much less expensive when it comes to interest rates than a home equity loan, which is running about 8.5% on a 10-year term. So that is the difference there when it comes to interest rates. What's also different is that a HELOC, unlike a home equity loan, has a variable interest rates, which adjust each month. So if someone's making interest-only payments, then they might see mild variations in that fluctuation. But beyond the HELOC, there's cash-out refinancing, but that seems highly unlikely. So just think about it for a moment. Right now, we have a lot of folks that refinanced during the pandemic or shortly afterwards when mortgage interest rates for traditional mortgage rates, that's for 15 and 30-year loans, were as low as 3%, maybe 4% if your credit was a little less than stellar, but still those are incredibly low rates. So that it's very unlikely that anyone who refinanced during that time when interest rates were that low is going to want to get into a new loan with an interest rate that essentially is nearly double what they presently have. So let's talk about the cheapest way to get home equity out of your home. And they're going to go into the option of the HELOCs, of course, but they said typically, and I was impressed to hear this, or to read this, I should say, that the cheapest way to get a home equity out of your home is with a reverse mortgage. And why is that? When we talk about the cheapest, you have to account for the servicing of the loan, right? The monthly loan payments. And it notes that unlike HELOCs, home equity loans, and cash out refis, reverse mortgages don't require monthly payments. So kudos to CBS News' column because they are factoring in the cost, the monthly burden, that is, of making those mortgage payments each month when you're considering what is the cheapest loan. And also they note that the reverse mortgage is typically limited to those that are 62 and older. But that said, there's one thing the column doesn't mention that I feel really needs to be brought to light, and it is this. A HELOC, our home equity line of credit, the bank or the lender can actually reduce the available credit line or completely freeze it, making it unavailable to the homeowner. And that's typically done when there's been a significant change in the homeowner's financial circumstances. Could be a loss of a job or a reduction of income. Also, we've seen this happen in 2008 and 9 during the great housing crisis and financial crisis of 2008 and 9, where the HELOCs were simply frozen. I had friends with credit scores that were right up there at the top, and they had them completely frozen. So unlike a HELOC, a home equity conversion mortgage, which is the federally insured reverse mortgage, if you're not familiar, does not freeze the credit line merely because home values are dropping in a particular area or nationwide, or if you've had a reduction of income. So to conclude, if you're looking for the absolute cheapest, least expensive way, you've got to factor in the servicing of the loan payment each month, and CBS News does do that. So it seems that the HECM is going to come out on top when it comes to the least expensive because you don't have that burden of monthly payments. Here's a very interesting column I came across in AOL. It says, I'm 72, facing a tough choice. Do I pay my taxes, that is property taxes on the home, or do I lose my home? What should I do? That's a very relevant question, unfortunately, one that's being asked more and more. So let's dive into the details. It says a 72-year-old Reddit user is trying to make their path through a really difficult situation. They bought a home that was too expensive, which I really believe is a huge mistake, especially for someone that is nearing retirement. And they got lucky by playing the market, but now the taxes are too high and he doesn't really know what to do. So what is his best course of action? Well, if you've ever been on Reddit, I tell you what, there's a lot of opinions there, but perhaps that's a good place to gather a meeting of the mind, so to speak. But this individual bought a home in Northern California, and the mortgage payments, strap in for this, $6,000 a month. So 60% of his income was being spent on just the mortgage alone. But now he's lost his job and he only has $5,000 a month in retirement income. He doesn't specify what that is. It may be a pension or a benefit plan, defined benefit plan, and then $2,500 in Social Security. That's a pretty hefty Social Security check, actually. But that's only $7,500, and he's used to having $10K in income. So he has about $130,000 in the bank, which he could pay the bills for, but eventually that money is going to run out. So you figure out he's short $3,000 a month. Let's just make it easy, or $2,500 a month. That's going to be a substantial sum of money. So if we divide the $136,000 that he has in the bank today, he would only be able to afford to remain in the home for 4.5 years, and he would have no liquid cash. That's not a good situation to be in. So one of his ideas is to really let the tax lien be placed on the home, and he could use those funds to stay in a house for a year or more. The question is, would he be paying those property taxes during that time, and also that $6,000 a month mortgage payment? So he's not sure if the mortgage company will take the money from his bank or foreclose on the home and force him to leave. And he's 72 years old. So what can he do? Where's the wiggle room in that situation? Well, here's some of the advice. One is unsustainable. We know that. We just went over the numbers. And of course, Reddit being a platform full of opinions, there were many. One said that they should meet with a financial advisor who provides specialty help for the elderly. And there could be options, including a reverse mortgage, depending on how much equity that the individual has in their home. Now, if they did have adequate equity, and I really doubt they do in this situation because they really overextended themselves in their monthly payment, but let's just say they did, that would be a huge relief. It would get rid of a $6,000 a month drain on their monthly cash flow and just really be a godsend in this situation. Some suggested that he explore financial assistance programs, as there are sometimes local nonprofits and government agencies that can help one to stay in their home. Some of those are actually specific to property taxes, which, by the way, we'll be covering in today's episode of the Industry Leader Update. Be sure to check that out on HECMWorld.com. And a very wise comment from one poster says he should contact his mortgage company and explain that he's lost his job and see if there are options for a loan modification. That's good. You want to definitely keep in communication with the loan servicer, but even a loan modification, as many are now learning, just simply delays the inevitable, because anything that they've reduced on the monthly payments is going to be added to the back end of the loan. Ultimately, they say unless he can qualify for a reverse mortgage or get some financial relief, he's going to have to leave the house. And they say to do that sooner than later is better, and doing it voluntarily before you're foreclosed and evicted is also wise. But simply not paying taxes, that's not an option, nor is staying in the house for another couple of years without making mortgage payments. So this is one of the problems that individuals are having, even guys that are in their 70s, guys and gals in their 70s. They can really be rolling in the dough, having a good monthly income, and then find that income gone through unemployment, and now they're forced to live on 50% or more of income than they were used to. And I think this is just a good reminder that there are a lot of older individuals out there who really need help today. This gentleman, I would put good money on it that he probably doesn't have the equity to qualify for a reverse mortgage. But I want to bring this to your attention because there are hundreds of individuals like this in your community as well right now. One of the blessings of working in the reverse mortgage industry is that we are a very close-knit community, and as such, we've built friendships with many of those that we not only work with within perhaps our own lender or brokerage, but with those that are with competing institutions. And these friendships have been forged over decades. But the dark side of that, the downside, I should say, is that it really is painful to lose one of our own. And unfortunately, we received news recently that Kathy Martinez, who worked most recently with Mutual of Omaha, has passed away. Housing Wire has covered this story. We're going to look at that, and we're also going to look at her obituary. Kathy is a longtime reverse mortgage veteran. Many of you know her, and served most recently as an account executive with Mutual of Omaha's reverse mortgage division. And she passed away in Florida in late April. She was just 60 years old, so we were so sad to hear that she has left at that young age. Now, her career began more than 20 years ago and included time working with Financial Freedom. For you old-timers in the industry, you'll remember Financial Freedom. She also worked with what later became Liberty Reverse Mortgage, and also with One Reverse Mortgage at one time, which has now become Rocket Mortgage. So this is kind of a recap of what she's done. Kathy transitioned to become an account manager at what later became Liberty Reverse, and then also with One Reverse Mortgage. And that is now Rocket Mortgage. As we know, these mortgage companies can tend to change names. So let's look at some of the statements from those in our industry. Mark O'Neill, who many of you know, who serves as the VP of Wholesale at Mutual of Omaha, said this: "Several of us had the opportunity to get to know Kathy as a coworker and friend over the past 20 years during her various positions at Financial Freedom, MetLife, Liberty, and One Reverse before she joined Mutual of Omaha," adding those who knew Kathy always saw her as kind, upbeat, and a good friend. And I know Kathy's clients and coworkers will miss her dearly. Please keep Kathy, her daughters, and her grandchildren and extended family in your thoughts and prayers. And I concur with that as well. Kathy was born on May 18th, 1964, and she is survived in part by her two daughters, one son, and 5 grandchildren. And here is the obituary that you can find at brownandsonsfuneral.com if you want to read it. But great picture here of Kathy, her smiling face, as many of us remember, and it just tells us a little bit more about her life outside of the reverse mortgage industry. But this obituary does include several references to her professional career. So we mourn the loss of Kathy Martinez, and sad to report it. Just on a personal note, it's been a rough couple of months. We just lost Kathy in April. And then just a month before, maybe a little longer, we lost 2 industry veterans, and that was Jerry Wagner with IBIS Software, who many of you knew and loved, and also Alex Spanko, who is a former writer and editor at Reverse Mortgage Daily, who passed away at a much, much too young age. So it's been a rough couple months to losing our own, but in conclusion, we do want to give our best and our thoughts and prayers to Kathy's family and her children, and also those of you that worked with her as well.